Welcome back to Everything Money. We welcome you in again. Last week we did a video about stock market crash warnings, and other channels definitely use clickbait thumbnails and titles to get you to watch. In this video, we want to talk about what a stock market crash or correction might look like. We're going to follow up our thoughts from our last video. Our fanatical patrons have asked so many questions about what do we do? Where should we have our money? Should we have it in all cash? A lot of, as other channels would say, FUD building thoughts about fear. What we want to bring to you as a value investor, and if you're learning to be a value investor, is the idea of peace, calm, and
even excitement, Seth. Excitement for
I would
a
say
crash.
So. Excitement. We want to show you not the clickbaity version of a stock market crash, but more or less the feelings of how can we prosper from a stock market crash. Because if you watch this channel on the red days where people flock to our live streams, Paul, Mo, and I have smiles across our face. And I've learned this over the past 3 years. I represent you. Is when I used to just be like, oh my God, what's happening to my account? I am embracing this downturn, and we want to further this topic more. So in general, we're going to look at stock market crashes and how this might affect ETFs. Our patrons are asking, what do we do? And Paul, you're going to tell us your thoughts following up our video on, and especially involving ETFs if we have our money, which you've told a lot of our viewers that's where we should have our money is in ETFs. So go ahead.
So years ago, you guys know my friend Daniel. I used to help him in school. And when he was first learning with me, we talked about stocks, and I'd say, oh yeah, stocks are going down. I love this. He went to school one day, and his teacher said something about stocks, and she said, oh yeah, stocks are great because they're going up. He goes, well, don't we want them to go down? And she was very confused about this. Now, this is a kid who's hearing this from me day in and day out. So he understands that, but even she was like, why do we want that? It always amazes me that investments are the one thing in the world that everybody wants to pay more for.
Yes.
Right? We want you to have the different mentality of, okay, let me understand where we stand currently in the market, which, by the way, is at historically high levels on many different valuation metrics. There will be a crash. 100% there will be a crash. When? No clue. Anybody saying otherwise is absolutely lying to you. No idea when it'll happen. I would have never thought we'd be seeing 4,400 in the S&P ever for over a decade. It happened. Okay, we don't know when it's going to happen. What we want you to do is, one, be prepared emotionally and psychologically, not financially. If you are saving for retirement, do everything the same month in and month out. One of the most common questions I get is, Paul, if you think stocks are so overpriced, why shouldn't I sell everything waiting for a crash? Because I said the same thing at 3,000 in the S&P. I said the same thing at 2,500 in the S&P. I have been wrong for a long time. Now, does that mean that me being wrong is going to be wrong forever? No. Do I still think the S&P is going to go below 2,000? Yes, I do. Absolutely. I think it's going to be worse than that. I've even talked about 1,500 to 1,800 in the S&P. People hear that and go, you are nuts. Let me remind everybody that the NASDAQ fell 83% from its peak to its bottom in the 2000 crash. Nobody thought that was even close to possible. It fell 83% from peak to trough. What I want you to do is, one, be ready for it so when it happens goes, okay, we know where this thing is going. I'm okay with that. I'm here to take advantage of this. Two, take advantage of it. When it does go low, if you have extra income, your income is going up, you have extra money from something, know by watching our channel what the future holds because of that. One of the most reliable metrics in stock market history, the Warren Buffett indicators it's called, is the stock market to GDP ratio. Anything above 138% is considered overvalued. Extremely overvalued. Significantly overvalued. Anything over 138%. Seth, do you remember where we're at right now?
Is it upwards of 200?
It's right here. 205%.
Lord, look at that.
We're at 205%. Do you hear this? We're at 205%. That's an insane number. Absolutely insane number. Okay? Now, look at this. The highest level it has is 138%, significantly overvalued. Fair valued is between 96 and 117%, and we're at 205. That means just to hit fair value, we have to fall in half. Now, guys, let me remind you, how often do we just go to fair value? Remember what stocks do. Stocks do this. Stocks go up over time. This is fair value on stocks over long periods of time, right? This is what stocks do. They're rarely at fair value. They're either over or under. So I personally believe stock has to fall by over 50% for us to get to a point where we all feel that the future potential for earnings is great.
So if I have to explain this trend, Paul, to normal folks, because they can't even quite understand that. Why does the stock market go up? And I try to boil it down to the idea is people are simply trading things like they're in a real market, and everyone is trying to make money on them. So when everyone has an effort of making money and we're trading back and forth, it's a climbing.
Well, remember, people buy investments and sell investments for very different reasons. When I first got into real estate, I cared about why somebody was selling the property. Why? Because I'm like, what am I missing? They're selling the property. First off, they could be selling for a million reasons you don't even realize. They could be fully depreciated on the asset and they want to convert it to another real estate deal to get depreciation. They could be ending their career and saying, you know what, I want to leave money to my kids. I don't want to leave them properties, blah, blah, blah. They could be just negative and wrong. I've met people who own thousands of apartments who don't understand the basics of investment, right? There's a million reasons they might be selling or buying a property. Same thing with stocks. What you need to worry about is your own process. That's why you're watching this.
Yep.
To understand why stocks going down, especially going down significantly, is a good thing for you. Is it scary? Absolutely. In the emotion of everything is scary. But we have seen, for example, our Carnival Cruise Line stock, we just did a video on them, went up to 31, 32 bucks, and now it's down to 22.
Yeah.
Most people would be scared about that. I'm sitting there saying, no, it's an opportunity for me to buy more.
Yeah.
Right?
Yep.
So this is the big thing that has to do with any stock market crash warning. Everybody else, all these other channels sit there and say, here's the warning, it's coming soon, imminent. I don't know when it's happening. It could happen tomorrow. It could happen 5 years from now. The bottom line is, when we see valuation metrics, the more and more overvalued something is, the more and more likely it is to crash. And this is at historically high levels. Historically high levels.
Mo, when you see other channels kind of, I say ignorance is bliss. A lot of channels just keep kind of sheltering their eyes from reality and just saying, embrace all this wonderful EV explosion. Your morning show, you guys talk a lot about inflation and jobs. I mean, what are you seeing from people commenting on your videos about, I guess, the potential fear out there of this coming?
Well, there's a lot of people that just say that we don't get it because they've never seen anything else. And my point is that I'm 32 right now. I was around in the stock market when 08 happened, but I wasn't around like Paul was because he's older than me. Well, you weren't paying attention, were you?
No.
Okay, so Paul, I'm going to use Paul as an example. He has seen it before. So I'm using what is out now. I want to dig into this as much as I can. So the next time this happens after it crashes, I could say, oh, I've seen this before. This is why I think it's so important that you guys educate yourselves now, even if you don't think it's going to happen. You can think that the stock market can only go up. Figure out now, because it's going to happen, even though you know that in the back of your mind, that when it gets to that point in the future, it's going to happen again. It's going to happen this time. This is just what happens. And I think there's something I really want to drive home, and it comes down to the ETFs. And we got this question from so many people in the Bid and Ask Nation. The last video we did, they said, should I go to cash? What should I stop buying ETFs, etc.? Guys, keep buying your ETFs the same amount every month. The point is, invest now, invest when the market's way down, invest when the market's way up. Eventually, at the end of your career, you're going to be up. You're going to collect dividends from it. This whole thing, it comes down to time in market versus timing market. Absolutely.
Yeah, Paul, double down on the whole idea about this channel is, for most people that don't have a holding group and thousands of properties and businesses, for most people like myself, average employed folks, your thoughts on what you would not advise, but what
I
you
can
suggest.
Suggest. Yeah, go ahead, Paul.
Your job is to save month in, month out. That chart I showed you guys, the chart that I created of this stock market here, if you always buy without even thinking about it, guess what's going to happen? You're going to overpay, you're going to underpay. You're going to overpay, you're going to underpay. You're going to overpay, underpay. And guess what? Over time, you're paying this. That's what you're paying. So you're going to use the stock market's history of going up. And if you go look back, we have 150 years of stock market history going back to 1871, literally 150 years. Go back and look what happened after major crashes. We always end up better. And go look what happens when we're massively overvalued. We always end up worse in the short term. What's the short term? 5 or 10 years. But that's not your concern. If you're close to retirement, 5, 10 years away from now, you should be adjusting your investing based on that. Because the next step, according to history, according to the data, remember, everything The future is a steady stream of income, $1. That's going to happen no matter what. The more you pay for it versus the less you pay for it. Which one are you going to make more money on?
Yeah, the less, of course.
Of course. So when you look at history, whenever stocks are overpriced, or even not even overpriced, they could be just higher, the less return you're going to make. The stock market GDP ratio expects a negative 3.4% a year for the next 10 years, including dividends. Dividends are about 1.2% right now. So they're expecting a minus 4.6% return on the actual value of the S&P over the next 10 years. Negative 4.6% per year for the next 10 years. It expects the S&P 10 years from now to be around 2,500 or 2,600.
So how does a normal person like myself and our viewers start embracing and brainwashing ourselves that we're going to be okay, Paul?
It just takes listening to this channel, listening to other people, just think about it over and over. I want cheaper. When I go to the store, I like to pay less for my goods than more. Yeah. When I go buy a house, I should want to pay less for my car. Everybody out there in the world, the second somebody brags to me about how little they pay for their car, I immediately think to myself, bad investor. Because I look at it going, why do you spend so much time researching what a great deal you got in a car to save $500 or $1,000? Go do more research on stocks that'll make you hundreds of thousands, if not millions. In retirement. Yeah. I don't get this. It's just that for some reason in investing,
it's the emotion.
People want to pay more because you see the euphoria of everybody's doing well. Everybody's this. It's FOMO. I can't miss out because my neighbor's making money. Congratulations. I love it that everybody's making so much money and I'm not.
I read something the other day. It said one of the hardest part for people, it's not necessarily losing money in the stock market. It's missing out when everybody else is making money.
Yeah, you see
that's one of the hardest parts.
You see the Facebook posts. I mean, I have friends on Facebook. They've started group chats about the cryptos and
we're going to have a time in the next 5 years where people are going to say, of course it was obvious we were overpriced. We had cryptocurrency that had no basis. We had companies going public in SPACs with no revenue and no profit. We had all this. Of course it was obvious. I'm
NFTs.
like, oh.
Yeah, NFTs selling for millions of dollars.
A friend of mine recently said, Paul, everybody saw WeWork was a ridiculous investment. I'm like, no, they didn't. Remember WeWork? It went literally from $47 billion valuation to zero in a matter of 6 months. Everybody thought that was the future. Oh, it's a tech company. It's not a real estate play. What do? They rent office space. So it's a real estate play. No, it's a tech company. Let me recap. What does it do? They rent office space. So it's a real estate play. No, it's a tech company. Got it. Do we hear that on anything else these days?
Yep.
It's this car
Tesla,
company.
It's a tech company.
Yeah, it's a car company that's a tech company.
Guys, this plays out the same way every single time. Different plot, different character. It's all the same thing. I should say it's the same plot, different characters. That's all it is. It's still euphoria. Is it possible that everybody in this country, including your 13-year-old neighbor's ex-boyfriend...
I got a funny one.
You had a funny one? Yeah. Is a stock market or crypto expert? Give me a break. This is impossible. What's your funny one?
I was telling Tim this yesterday. So I got added into this group chat in Signal, and it's made up of a woman who's a nurse, a guy who knows nothing about the market, one of my friends, and a 16-year-old kid. And they are all experts in crypto and trading penny stocks and this and that. And I said to the 16-year-old, I was like, so what do you know about the market besides for what you're doing in this group chat? He's like, oh, I have no idea. I don't know anything, but I'm making money. So when you have people like this who don't even know what the New York Stock Exchange is.
Imagine the world in which they went randomly in the street and said, you're going to be the new Major League Baseball second baseman because you're now the expert in baseball.
You know what's something you said in a video probably about a month ago? You said, imagine if everybody in the whole world was an expert at your job. What would you think? What would you think about that? No matter what your job is, what if everybody in the world was an expert at your job?
Why? Just because temporarily what they did happened to get the same results you did.
Yeah.
That's like saying we're going to flip a coin 20 million times in a row, and the one time we hit 18 heads in a row, we're going to be like, yeah, I'm an expert in flipping coins. Well, yeah, over a long period of time, you're going to hit, you're going to hit these things X amount of times in a row. But that's okay. Keep doing it. Cry later. It's funny. People always message me now. My friends always message me, Paul, here, look at this realtor. Are you telling me it's the market that's making them great? Yes, that's exactly what I'm telling you. Because when the market's great, they're like, look how great I am. When the market crashes, every realtor that crashed in 08, 09, we know what they say. The market screwed me.
Yep.
Okay. But when it was going up, it was your expertise that got such great deals. I'm sorry, guys. It doesn't work that way.
So how do we bring this home to our blessed viewers and patrons across the world?
Listen to our videos. Understand that when things are good, things will not stay good forever. When things are this good, all the more likely they won't stay forever. A crash is coming. But when things are bad, use it as your opportunity to buy more of what you can, Or if you're just like, I'm just going to buy month in and month out over long periods of time, you'll end up paying about market price for what you should, and you'll get a month of market return, and that's going to be great.
And with those ETFs, do not stop buying them. Do not go to cash. Just keep doing the same thing every month until you retire. And
Except unless it's ARK investment ETF, then just sell that. If you want to keep it, sell half of it, give me that half of the money. I'll piss away half of it on cocaine and hookers.
Yes.
Send you the other half when it's all said and done.
And then the other half, if there's any half left, put it in the S&P and Vanguard ETFs.
Yeah, exactly.
If there's any half left.
The app is out for our Patreon. 80 cents a day gets you so many things. Look what it gets you. It gets you our software. It gets you our mobile app. It gets you 30 years of financial data. Stock analyzer tool, real estate calculator, stock screeners, momentum trading, retirement calculator, Discord community. It's now $25 a month. It used to be $8 a month. It's going to $50 a month. Let me ask you a question. Are all these prices with all the benefits better than this? The answer is yes. This is your best value play you're going to have today. You're welcome. Bye.
Bye-bye. Yes, folks, we delivered the mobile app early for our patrons. Patrons, make sure you're going in the app store and getting the new the new updates, because we fix them on a daily basis if there are problems. So yeah, we thank you for being a patron. Stay with us. Learn to embrace the red days, and when everything crashes, we will see you on the live stream, because we'll be here smiling ear to ear eating Chipotle. So that's our take. Fondle the thumbs up. Thanks for watching.
But not buying Chipotle stock at silver price.
That's right, Paul. Fondle that thumbs up. I love you. You know.